We have studied about inducement, we studied about market structure, we studied about how to mark accurate market structure, like how the higher highs and how the higher lows forms. So today we have to study in depth about the inducement. What exactly is inducement? Inducement is a smart money trap. It's a smart money trap. Now the question is, trap for who? Of course, this would be for retail trader to trap early sellers and early buyers, to trap the sellers and buyers. To trap the early sellers and buyer. And the next question is how we have to find the inducement. So the inducement will be always on the left side. It will be on the left side of the swing. And how we can find it? So it will be on the left side. So the next will be for the buy side, it will be on the lower side. For buy, it will be on the lower side, and for sell, it will be on the upper side. We will draw it on the chart. That's done. And then exactly what is inducement? So inducement is a type of liquidity. It's a type of liquidity, and without liquidity, market don't move at all. They have to collect orders, they have to collect money, and then they move to their next destination. So this is a type of liquidity. So now let's find the valid inducement. So we have to have the exact high point. We can start from here. So let's assume this is our high point, and we have to see the very left side, this one. This is our inducement point. This is our inducement. But now let me ask you one question. If the very next candle is making an inducement, would it be a valid inducement? Let's find the example. Let's assume this is the candle, this is the highest point. For example, we have this one. Would this be, this is the next candle of it, this. Now this is the very next candle. This is not a valid inducement. Very next candle of the high point, if making an inducement, we will not consider it as a valid inducement. So valid inducement we will find always, it could be third candle, it could be fourth candle, it could be any candle, but it cannot be the second candle. So for example, this one. So this one is the high point we got. Let's draw the pen here. Let's say we have this one. So this is the highest point we have. So what will be the valid inducement? So this is our immediate inducement that we'll mark. And after that, our next valid inducement would be this one. So this is our highest point, and the next candle is red one, but this one is the low one. So this is our valid IDM, and the next IDM would be this one. Now let's see if we mark this candle, if we assume that this is our highest point, this one, even though we have that one, so just for the learning purpose, this is our the highest point. So if we mark this one, and can we mark this candle as an inducement here? This one. So our highest point is this one, and our low point is this one. So do you think, is this a valid inducement? No, because our highest candle is also the lowest candle. So we have to have a lowest point of our high candle. So if I see this is the height, so we have to go all the way here. So our valid inducement will be just right here. So what is the point here? My point is here. Let's start from here. This was our highest point, and we mark this one is the valid inducement, and the next inducement is here. Then why I mark this one, even though this is the lowest point of this high, but just to tell that this one is our high point, but at the same time this is our low point, and it has the same candle. So we need to have a valid inducement on the left side, but it should be lower to the highest candle. Since our low is coming right here, here you go, but we cannot mark this candle as it is not gone through. This candle is the high, so it's not gone through under. So let's say if the scenario would be something like this, but now yes, we can mark this candle as an inducement. So this is our valid inducement point. So here you go. So after this, our next inducement level will be here. Let's find one sell example here. Let's go back here. Here you go. So now we can see the market is downward. So let's say this is our lowest point. So this is not valid. We have to find a candle which has gone through the high of the low candle. So all the way, this is the mother candle, all these coming inside of it, and then we can see this one is also coming inside the candle. So we can say this will be our valid inducement. So it goes all the way here. So let's move to another side. As we can see, this is our low point, just right here. And then where is our inducement? This is the lowest point, and this candle has gone through the high of this one. So this would be our inducement. So what is the rule for the inducement? We have to look at the left side. If it is sell, we will look upside. If it is buy, then we will look for lower side. So this is the valid inducement. So now today's topic is breakout structure. Let's write it here. Static breakout structure. This is the topic for the today, since we have understood about liquidity, we have understood about inducement. So break of structure is very important, and valid break of structure is more important. Let's see. So let's say if the market is going this way, now retail traders see what a retail trader understand. They say like this is the market has broken, so this is a break of structure. So this is a wrong approach. We cannot say it a right approach. This is a retail trader approach, and this is a wrong marking. This is a wrong calculation. This is a retail trader approach. So basically, this is not a break of structure. And now, if market want to go buy or smart money want to go buy, so how they will move forward? Smart money concept, like how smart money will go buy if this point, here you go. Now we learn about the liquidity. So now this is our liquidity, or you can call it as an inducement. So this is our inducement. This is our inducement ITM. So this is our inducement. Now the question is, if smart money want to move further, then why they are not taking this one? This is all, this is all inducement, this is all liquidity. So without, we understood, without making, taking liquidity, market cannot move. Now if we see the market has gone all the way here, and then the, the break, make a break of structure. So between these 2 points, we can see one point is here and one point is here. So in the middle of there, this is the point that becomes a swing. We can call it a swing, we can call it an ITM, we can call it inducement or liquidity. So we call it internal liquidity because this was the middle point, has broken by this leg, it's all the way gone up, and this is the break of structure. Now this is IDM, this is, we call it as an internal liquidity. So now the point is, what is the indication when the chart, when you see a break of structure on the chart? So basically, break of structure is an indication that smart money wants to move beyond, or it want to go further buying point. Let, if market want to go buy, market has to take the liquidity from the low side. Now how it will go and take the liquidity from the buy side? So let's see, this is our point and this is our liquid point. If market want to go buy, it has to take this liquidity and then they will go buy. So now this point, this was our inducement, this was a swing low, and this was the liquidity point. Now we have to write down the rules for the break of structure, because we have explained what is break of structure. Break of structure is an indication for the trend continuation. But if smart money want to take or want to continue the trend, it has to take the liquidity from the down, which we have discussed. We can find always on the left side, and if it's buy side, If it's a buying trend, then the liquidity we can find on the lower side. So let's see what are the rules for break of structure. Break of structure rules. So rule number one is choose one point. That is, we can call it reference point. So, and then rule number two is mark the first valid IDM. Then rule number three, market must take out that IDM. Number four, candle body must close above the reference point. Here. So now we said choose one point. So we are talking about this one because we need a high point. Let's say if the market is here, this is our reference. Let's assume this market is currently here. So we have to find the valid IDM. So this is our valid IDM. Let's remove everything for now. So this is our valid, this is our reference point, and this is our IDM, which is on the lower side because market is on the buying side, buying trend, and we have to find the IDM on the left side and on the downside. So this is the IDM. So if the market want to continue its trend, it will come all the way down, take this IDM or take this liquidity, and it will close right above this reference point, which is here. So when a full candle body close above this reference point, then we can call it a break of structure and a valid break of structure. So as a retail trader, we will consider it, this is the break of structure and this is the break of structure. But as per SMC, as per smart money, we will not consider a valid break of structure until it has taken the liquidity. So in this point, if we see market was here, it came all the way down, taken the liquidity and closed above this reference point. So now we can call it a valid break of structure. I'm going to leave a question for you. So let's say if you understood our break of structure rules properly, let's assume this is the setup we are here. So this is going to be here and this is going to be here, and let's say now here. This was our reference point. Let me just put it on for now here. First question. This is our reference point. Inducement has been taken, and this is our reference point, and the candle body closed below this reference point, but the wick has gone through this high. Will this be a valid break of structure or no? This is question number one. Is this a valid breakout structure. Second scenario, I'm going to make another candle right here, and then let's take it. Now here you go. Now a full candle body has been closed above our reference point. Is this a valid breakup structure or no? So this is the question. Answer: if this is a valid breakup structure, if yes, just write in the comment section yes, this is a valid breakup structure. If not, then write in a comment section that this is not a valid breakup structure. So I'm going to leave this question, both questions for you. You can answer in the comment section. Now I'm going to remove all this text so we can have a look at the real chart, how we can mark this one on the, here you go. I'm going to mark, this is our high point, this is, and now we have to look, because this is the buying side, it's a buying, you can say buying trend or buying structure, and we have to look for valid inducement, and valid inducement will be always on the left side on the downside. This is our IDM, and this will be our next IDM, and this is our deep IDM. So we have to mark only the recent one, but if price go that way, then whatever comes on the next side. Okay, so we can see this is our highest point, and this is our inducement. Okay, here you go. Let's take this out for now. This is our high point, and this is our inducement, or you can call it liquidity. Liquidity has been taken. It can be taken by wick, or it can be taken with candle body close. Either way, liquidity has been taken. And question, is this a valid break of structure at this point? Here, is this a valid break of structure? No, this is not a valid break of structure. Why? Because if we recall the rules for the breakout structure, the candle body must close above the reference point. So this is our reference point, and at this point candle body is not closed above the reference point, it has been swept. So we have to wait until a candle body closed above the reference point. So here we can see a candle body has been closed above the reference point. So now we can call this one a break of structure and a valid break of structure. Now if we have a look at this side again, now our new high point is right over here, and we have to find out our valid liquidity. So we have to find a candle, highest candle that has gone through the low point. So this candle is high and this is low. It's very tiny, but rules, we have to follow the rules. Deep inducement is this one, but immediate inducement is coming right here. So this is our reference point, After this is a valid break of structure. This is our reference point, and after this reference point, this is the IDM which has been taken. But now we have to see if close above. No, so this is again a sweep, so this is not our valid break of structure. So where valid break of structure happen, this is our valid break of structure. So what it did, so it did not take this liquidity, it took only this liquidity, and then price closed above, a body closed above this reference point. Here it was a sweep at this level, here it was a sweep, and the body closed just right here. So this is our valid break of structure. So I hope you understood what is liquidity, how to identify the liquidity, what is inducement, how smart money trap early buyers and early sellers, and what is a break of structure, and how we can mark a valid break of structure. Because break of structure can happen this way, like this way we can call it break of structure, because here it has taken the previous liquidity, but that is internal swing. Our highest point was this one, and then this one, and between this and this was our liquidity, and this was our liquidity. So we have to memorize the rules for the valid break of structure. So I hope you have gained sufficient knowledge about break of structure. We will see you next time with another video.